Hello YouTube, it's your boy Crazy Trader out here again with another major stock review. I hope you guys are having an amazing day, and today the stock that I'm going to review is MFA Financial. I'm just going to go straight to the point, okay? MFA Financial is not doing too good because of the pandemic. It's just like IVR, and they go hand in hand. What you have to realize is any one of them that takes off is going to pull the other one along. Okay, it's just like Tesla and Neo and all these electric cars, pulling each other along. That's what is going to happen with this stock. If MFA takes off, it's going to pull IVR along. If IVR takes off, it's going to pull MFA along. A lot of these mortgage stocks are going to pull each other along if they take off. So I just want to take you down here and show you what the company is about. It's a real estate investment trust, which engages in business of investment. You can go and read all this yada yada on Robinhood. It's a great company with a 1.7 billion market cap. The dividends is 11.6. I don't think this is right. I think it's around 6 or 8 right now because they reduced it. If I'm not mistaken, they reduced it. So it's a good company. If you look at the 6 ratings that they've had, 17% says buy, 83% says hold. If you look at the sell, nobody's asking you to sell, okay? Nobody is asking you to sell. So if you have it, hold it. If you don't, you can buy it. There's nothing like selling. I personally hold MFA Financial because I have IVR, so most definitely I hold MFA Financial. You know that. I love the stocks. I love the mortgage stocks. Normally people will tell you don't look at the past price and compare that to the present price and buy a stock because it's a rookie move. Yeah, I understand it's a rookie move. In the past markets, that was a rookie move. In a market like this, in a very volatile market like this is not a rookie move. This is a good move. You can look at a past price and buy a stock based on the past price because it's not a rookie move. If it was 2-3 years ago when the market was very stable, you say that it's a rookie move. Now it's not a rookie move. So don't listen to all those so-called experts who says, oh, don't compare the past price to the current price. No, that's what we are doing today. We are comparing the past price to the current price because the price fell so steep and deep in the pandemic that we are assured that it's going to recover. That is what happens. MFA wasn't a very bad or poorly performing stock before the pandemic hit. No, it was a good performing stock before the pandemic hit. If you go back 1 year, this stock was around $8, $9, paying good dividends, and then the pandemic hits, and then boom, 36 cents. Can you believe that? MFA was at 36 cents. Check out how much it is now. It is at $3.80. Can you believe that? And they're telling you not to compare the past price to the current price. What do you mean by that? You compare the past price, and that's how you buy a stock. I didn't catch it at 38, and I regret because I wasn't even looking at it. I didn't even see it. I was looking at other stocks. If I had caught MFA at 38 cents, I'd have bought like 2,000 shares of it. But now I don't have it, and it saddens me. A lot of people took advantage of it. I saw someone who was averaging around 38, 39 cents per share and had like 3,000 shares of it. And if that person still holds it, and it's now, last week, I'll show you what happened last week. Last week it went all the way to $4. It went all the way to $4. So if that person who is averaging $36 or $38 has 2,000 shares and it went all the way to $4, I mean, that is good money on the table that you can take. How you could see it's very volatile right now because a lot of day traders are day trading this stock. They are day trading, picking 10 cents off the table, picking 20 cents off the table. That's okay. I mean, if it gives you enough money, because if you put 2,000-3,000 in and you get $100 back, some people like it that way. That's fine. I don't. I when I'm taking money, I want to take more money off the table. I don't want to take little bits of money off the table. But I understand the people who are trading it daily, and so people buy a lot of it, $10,000 worth, and then they can get like $500. That's okay. That's good money too. But if you look at this, I'll take you back to a month. The month's chart, it was up 5%, or it's up 5% in the month. You should always see the trend of a stock. Look at what the stock is doing. And in the past 3 months, this stock has been going up and up. It's not going anywhere. Look at that, 36% in the past 3 months. So you should know that it's growing. it's growing, and as this pandemic goes over, MFA is going to go back to its old glory. Like I say, it's going to be a very good stock. I have the stock. I'm averaging at 285, but I just have 52 shares of it. So I'm hoping to build up my position. Currently, I'm holding like 500 shares of IVR. I'm hoping to build MFA to around 400 shares too, hopefully, because I know it's going to run when the time comes and IVR takes off. MFA is going to follow it. If MFA takes off, IVR is going to follow it. So I don't mind. I have 24 contracts for 2021, July 2021. This is really sketchy though. I'm kind of holding up on this one because I put it up all the way to $7, which I think it was too steep for me, but it's okay. I still believe in the stock so much that I think it's going to do really well. I'm down 20%, which is just $48. I don't mind losing all this money in the contracts, but if it goes up, it's going to go up, and I think I'm going to get my money's worth, so I don't mind. I don't really bother about it. It's doing really good. If you can look into MFA, it has a good financial position too, and they are doing really well. I'll take you to the NASDAQ.com, and you can see the people who increase their position, the institutions that increase their position in the stock. And it wasn't major increases. There were little minor increases, 16,000, 10,000, but they all add up because a lot of these institutions, they don't sell, they don't day trade like all this, like us, the young people, the millennials and the Generation Z, who are day trading most of the time. But these institutions, they buy and hold, so they are holding a lot of shares. You can see this one holds 5 million shares, this one 4 million, this one 2 million. A lot of them are holding a lot of shares. So it's a good stock to look at. It's not going to give you a return of 300% like QuantumScape is giving, or 1,000% in 3 months like QuantumScape is doing right now. Heck, what am I saying? It can do that. I mean, you never know what this market can bring. QuantumScape went from August to December and it gave out like 1,000%. So this can also do that, especially in a market as volatile as this. But right now, I can't really assure you that it's going to do that, but I can assure you that MFA is going to grow financially. It's going to grow slowly. It's going to do really well. And you can really do your due diligence. Go to Yahoo Finance and check it out and see what articles have been written on it. Go to NASDAQ and see which institutions are holding it, the dividends that is paying out right now, the history of the dividends. It's a very good company. It's not a bad company. So you always have to do your due diligence on it when you are trying to buy the stock. I think at the price of 383, it's a good price to buy at right now, considering the fact that just last week it was at $4. So it's going to go back to 4. That's very soon, maybe in a week or two, it's going to go back to 4. Remember this, vaccines are out, and the fact that vaccines are out are going to push the stock way higher than it is right now. People are going to go back to their buildings, okay? People are going to go back to their jobs. People are going to go back to the factories. People are going to go back to schools and everything. All the buildings that these people own, all the mortgages, the mortgage-backed investments that they have, is all going to go back. So you should look into it, and if you don't have MFA, you should buy it. It's good for the little investor, the little guys like you and me, the guys who have just $1,000 in their investment accounts and they want to diversify their portfolio. I mean, MFA is a good side. You can choose between MFA or IVR. They are good stocks to pick. You can 20, 30 stocks, put it down, and they grow hopefully, and then they also pay good dividends on them. So you can get those stocks and get some good dividends as they grow. As a young trader, you always should look into stocks like this, guessing from the fact that you have, let me show you, 44% discount right now. Like I say, it's Black Friday on stocks for this whole year. It's Black Friday on stocks, so 44% discount. So it still has some good room to grow. And if it's growing, I think it's going to go over the $7 or $8. So with time, let's say by 2022, this stock should be around $10, $15. I'm trying to even reserve and give a very moderate prediction. Okay, I'm being reserved and so $10 to $15 is very moderate because they are paying very good dividends on their stocks. And now that we know about dividend stocks, this is a good stock to invest in. All right. Okay, so not to talk too much or take too much of your time, like I always say, remember, you always got to risk it to get the biscuit. And like and subscribe to the channel. It always helps out with the channel, you know. Helps with the algorithm. It reach you get to a larger market. So help, subscribe, and tell a friend to tell a friend. Anyways, I'm out of your space. Stay safe, stay blessed, and peace.